Karen Corlett, the first thing that strikes me about this debate is the title of it. I think it's a masterstroke in euphemism. Statements on bank reorganisation, and no doubt that was a very self-conscious choice of words by government, not least because statements on this, the fifth banking bailout, would read rather less attractively. But that's what we have here. The government's primary assertion is that they have adopted a new approach. And of course, that doesn't stand up to any scrutiny. The 24 billion in recapitalisation, 24 billion of taxpayers' money now sunk into the banks, bears the lie in that regard. The government also claim that this is the final deal, that this is the final figure. They make much of the robust stress tests that have been carried out. But what they don't say is that, for instance, on one of the key indicators of that stress test, the level of unemployment, we are just a shade off the worst case scenario as envisaged. I hope that this is the final tab. I hope that these are the final figures. But we sound a note of caution in this chamber today because we've been here before. We've been told before that there would be no more billions required, and yet the reality was far from that. The government claims that in consolidating the banking sector, a move, by the way, which is widely acknowledged as being necessary and long overdue, and in dividing out core from non-core elements within the banking sector, the claim is that this will result in an end of the domestic credit crunch and will get credit flowing to families and indeed to businesses. Well, at best, the jury is out on that. And if the government were truthful, I think they would concede that only time will tell whether or not that in fact happens. And I remind the House that on this score, we've been here before. We had endless statements and assertions from the last administration that the actions they had taken, propping up the banks, would result in credit flows. Well, guess what? That didn't happen. The government claims that it has now guaranteed liquidity from the ECB for the banks. What they will not address is their failure to secure that liquidity flow on a medium or long-term basis. The fact is that that money is still given on a short-term basis. And it's interesting to have heard Minister Noonan earlier on recite all of the positive commentary as he saw it from the international community in respect of the government's measures. He studiously avoided saying that this failure to achieve that medium-term facility from the ECB has caused at least anxiety on the international market. And of course, we have business as usual in terms of burden sharing because it's not going to happen, or so the government says, particularly and even in respect of the 36 billion of unguaranteed debt. The reason it won't happen, we're told, is because Europe simply won't countenance it. And I think in the course of this debate and others, there's been a very crude depiction of the concept of burden sharing and the demands made around it, when in fact the mechanisms to achieve fair and balanced burden sharing are not only long established, but are entirely economically rational and reasonable. So much so that even the EU itself, in the economic stability mechanism, the new permanent bailout facility at European level, explicitly recognises that there will be burden sharing, that there will be default. They're not so frightened of that word as some on the government benches are. Not alone that, they actually set out the benchmarks, the measures that would be used to guide such default. Proportionality, transparency and fairness. And I have to say that I think those are as good criteria as any that might be used. But here's where we find ourselves now as a state. We find ourselves in a position where the European authorities, with if not the connivance of government, certainly the agreement of government, will not, we are told, give us a hearing in respect of a restructuring of private bank debt. But they tell us from the other corner of their mouth that come 2013 that they will ably assist us in the course of perhaps a sovereign default. That's how this is shaping up so far as I can see it. I think rather than discounting people's legitimate and well-grounded worries that our burden of debt is now at the point of unsustainability, that the government benches would be better placed to act in the national interest and to put that argument and demand front and centre in our dealings with the European authorities and partners. And in this respect, can I say, the humble Deputy Durkan is no longer in the chamber, but I'm struck by his almost evangelical appeals to all of us. He tells us that no one in Europe likes us anymore. Perhaps he expected sort of winces of disappointment from the opposition benches. Can I just say to the Deputy and to government deputies, this is not a case of who is the most popular kid in the class at EU level. This is a matter of defending national interest, and be very sure when it comes to the heads of European institutions, be it Barroso or Trichet, when it comes to defending the interests of member states, be it Mr. Sarkozy or indeed Angela Merkel, that they operate on the entirely rational basis of protecting their interests. And therein lies the explanation for the resistance to a rational, organised sharing of burden of bank debt, which of course would have an implication for the core European countries, why they dismiss that, whilst on the other hand, with the agreement of our government, set up the very apparatus which can in time facilitate sovereign default, a much more serious scenario for all of us. Earlier in the course of this debate, government voices asserted, as though we didn't know already, that there is now an indivisibility between the banks and the state, banking debt and state debt. We know that. People on the street know that. And that's why this situation is so serious. Mr. Noonan, the Minister for Finance, Deputy Noonan, can make the argument that the bond yields have now slipped below 10%. He sort of set this out to the House as a piece of good news. They're hovering above 9%, and that means that the markets know full well, as rational, hard-nosed entities, that this state cannot sustain the burden of debt that we have continually taken on. The people on the street know that we cannot sustain it either. And the government have played their card that they inherited this situation, and so you did. I acknowledge that. But you are now in charge. You now make the decisions. You had the chance to shift gear, to change direction, and to carry out the promises that you made to the people in the course of the general election campaign, and you blew it. Perhaps it was more comfortable for you to stay in the established groove of Fianna Fáil policy. Whatever your rationale, whatever your reasoning for it, you have made a mistake. And I'll finish, Ceann Comhairle, by saying this. There is little sense in Fine Gael, or with respect, the Labour Party, who made much about the bank guarantee, who throw all sorts of shapes over the last 2 years. Save the hot air, because when the real test came to take the right decisions and to change tack, You buckled. You buckled. You are in government. The responsibility rests with you. And dare I say it, when your position of taking on this debt, of discounting any notion of burden sharing, when that runs against the illogicality of itself, and when the full consequences of that come to light, do not point the finger at Fianna Fáil, because they are no longer in charge. And as an opposition deputy, I do not want to spend the next year or more listening to haranguing and harassing and finger pointing between this government and the last administration, people who are essentially on the self-same policy track.
Thank you, Deputy. Now I call upon